Hey everyone, the Trade Desk is an advertising company that helps businesses purchase advertising inventory through digital marketplaces. It's an interesting company that many investors are starting to take interest in. So in this video, I'm going to go through some of the items that every investor interested in the Trade Desk stock should know. So let's begin.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the Trade Desk saying that walled gardens command the bulk of digital advertising spending today. And because those tech giants have made it super easy to reach customers at mass scale. Of course, the tech giants that the Trade Desk is talking about here is Alphabet and Meta platforms, which together command a large bulk of the advertising spending worldwide. Alphabet generates hundreds of billions of dollars in revenue annually, and Meta Platforms is approaching 200 billion in annual revenue from advertising. So with the two of them commanding the large bulk of the spending worldwide, but still the advertising industry is approaching 1 trillion. So even with Alphabet and Meta Platforms taking up roughly half of that market, there's still a large opportunity available. The Trade Desk has been on a mission to open the internet to make it more accessible and against these walled gardens of Alphabet and Meta platforms that command large markets. And one of the reasons they command a large market share is because they have billions of daily and monthly active users on their platforms. So marketers who want to advertise, it's hard to find that level of scale anywhere else. You can go directly with Meta platforms and you can reach 3 billion people every day. 3 billion people log on to one of Meta's apps. And so if you want to reach roughly half of the planet, you can just stick with Meta platforms and you can reach roughly half the planet. There is scarcely any other opportunity that offers that kind of scale. Alphabet is similar, especially with YouTube. 2 billion monthly active users on YouTube and more across its various products, including Google Search and the Google Productivity Suite, including Gmail and Google Sheets and others. So these large businesses, they allow advertisers a one-stop shop to reach mass audience. And so that's an attractive option, and that's what's making them so attractive. But the Trade Desk is saying that now our advertisers can access that premium marketplace at scale easily and with confidence. And it's because the Trade Desk offers advertisers a marketplace where if they just go with the Trade Desk, they can reach that kind of scale because the Trade Desk can access multiple various opportunities and scale up to that level. So all the buyer has to do is create a relationship with the Trade Desk. The Trade Desk will then surface all of the various advertising inventory available worldwide and deliver those ad impressions to those various areas. And so buyers don't have to go one at a time to Netflix and Disney and others to buy up all that advertising. They just go with the Trade Desk, turn on a programmatic advertising campaign, and reach these mass audiences at scale. So Trade Desk highlighting some of its relationships, saying they're integrating directly with the Disney real-time ad exchange, which includes Hulu and Disney Plus via their OpenPath technology. And Disney has significant amounts of advertising inventory available, not just on Hulu and Disney Plus. They also have ESPN Plus, and then they have their legacy inventory as well through the linear channels. And so you can have a relationship with Disney, and that offers you access to large audiences as well. Then they also have a relationship with NBC Universal, which will make the Olympics available programmatically to advertisers and is doing so with the Trade Desk. So these relationships help make Trade Desk a viable partner for advertising companies. So they highlight an example of how Target in Australia and their agency OMD worked with us to upload their first-party customer data into their platform, and then they targeted new customers using the Universal ID too, and that helped their conversion rate increase by 66% versus using traditional identifiers, and their cost per action decreased by 36%. So this is another form of targeted advertising that increases the effectiveness of the advertising. If businesses like Target can optimize data, use proprietary data, and target audience, they can amplify the reach of prospective customers. If you're a business in Australia, there is no reason to advertise to somebody that's in, let's say, France, Paris, France. That person's not going to be your customer in Australia. And so if you don't have those targeting metrics available, then your advertising could perhaps just go out on a mass scale, and you're wasting your advertising because it's going all over the place instead of focusing on your target audience. And so the trade desk allows for increasing targeting, especially if you upload your proprietary data and then use the trade desk tools, use both of them together, you can have really, really optimized advertising campaigns, and that's making it more attractive for businesses to work with the trade desk. All right, so the trade desk has been growing very nicely on the top line. Revenue growth has exceeded the growth rate of the advertising industry overall, and it's been a profitable business for some time now. Over the last 5 years, its operating profit margin has mostly been positive on a trailing 12-month basis. It did have a moment here in late 2022 where it dipped for a second and then it's recovered. But for the longer term trend line, its operating profit margin had been trending downward up until 2023, since it reversed course and now is heading back upward. It was on a non-exciting trend line here going straight down, but the turnaround is solid. Let's see if the trade desk can continue going forward with this increasing operating profit margin. The trade desk stock is not cheap. It's trading at a forward price to earnings of 52.27. It's on the more expensive side of company valuations. The company is growing revenue nicely and profits nicely, but the earnings per share and the operating profit margin are only recently recovering from those decelerating rates of several years ago. Those are all several reasons why I've kept the trade desk stock rated as a hold and not rated as a buy. So hopefully this sheds some light on this interesting digital advertising company. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.